So the monetary system that we have today is pretty much dead, right? It doesn't really work anymore. It was designed, it was created for a world that we're no longer in. We have big problems in the world today right now. We have endless money printing. That's a big problem. So how do we solve it? Fix supply. We have a big problem with censorship. What do we need? Censorship resistance. We have a big problem with permission. Like the money system is permission, sanctions. So we need something that's permissionless. Money is bordered, but now the world's breaking apart. We need something that's borderless. The system that we have today requires trust, but trust is broken. We need something trustless. So those are solutions that come to the problems that we have today. And as where we're sitting as of right now, there's only one solution for that.
Welcome to the Microscopic Podcast presented by GoldRepublic. My name is Alexei Duronov, and in this format, I invite you to look at the world through different lenses to see what's hidden in plain sight. We'll dive deep to understand the forces that drive macroeconomics, financial markets, and the emergence of a new monetary system with sound money like gold, silver, and digital assets like Bitcoin. We'll also investigate how geopolitics and power games shape the world we live in, and also what can we learn from history to understand the present and prepare for the future. This week, I have the pleasure to introduce to you Mark Mas, an entrepreneur, author, investor, speaker, and host of one of the fastest growing YouTube channels about finance and money, with close to 500,000 subscribers. Mark and I met during the Bitcoin Amsterdam 2023 and recorded a small conversation about different topics, including the misconceptions around inflation and its measurement, why the end of today's monetary system is sooner than we might think, and how this new era is a paradigm shift that will usher us into a new golden age of sound money. As a thank you gift to our listeners and subscribers, we'd like to give you 1 free gram of gold worth approximately 60 euros if you open an account at GoldRepublic. Check the link down below in the description. I hope you'll get fresh insights and enjoy this conversation. If you do, please give it a like and subscribe. Leave your reactions down below in the comment section and share it to those who need to hear this. Well, Mark, it's a pleasure to have you here.
Yeah.
We're at, as we can see, at Bitcoin Amsterdam in Amsterdam.
Yeah.
And you've had some talks, some discussions. But first of all, I mean, forgive us for the background noise. We're obviously here in the press room with all kinds of things happening. Jimmy Sung being interviewed right next to us.
Yeah.
A friend of yours. And my first question is actually, what is your most heretical view on the financial system?
My most heretical view?
Your most heretical view that goes against pretty much any principle.
Well, I like to start each one of my videos by saying everything you've learned is wrong. I want to change the way you think about money. Everything you've learned is wrong. So what would be some of those things that you've learned is wrong? I like to say maybe two of the greatest tricks the Federal Reserve, the Central Bank of the U.S., the two greatest tricks they've taught you is one, that the money supply should always go up. We need the money supply to expand. How else could we meet the growing demand, the rising population? How could the economy prosper if the money supply didn't increase? And two, that asset prices going up is a good thing. Mm-hmm. So those are two contrarian takes. Neither of those are true, in my opinion.
And if we look, let's say, back, because we've just talked like earlier on, and you said it's been 5 years you had your YouTube channel, which is pretty big by now. It's more than almost 500,000 subscribers. And what motivated you to actually create the channel? Did you feel maybe some pain? Did you see maybe things that back then worried you, or like how did it all started?
Well, the honest answer isn't anything near that valiant, I would say. It was really because of a need of trying to sell a product. Mm-hmm. So I've been on the internet for a long time. I have some really early days from the dot-com boom. I have a Fortune 500 exit. So I've been involved in the space for a long time, but I was always like anonymous. In 2017, I was writing a cryptocurrency research newsletter and selling it. And at the end of 2017, just as Bitcoin had gone from $1,000 to $20,000, markets stopped going up when there's no more buyers. And so it sucked all the buyers in that cycle. And then basically on plan, Google and Facebook banned all advertising of cryptocurrency. But I was selling a newsletter, and how am I going to sell it? So my business partner at the time, we're not business partners anymore, but at the time, he said, hey, well, what I'll do is I'll start a YouTube channel, and I'll start doing technical analysis all day, and we'll sell it that way. So I was like, okay, so we started the YouTube channel. After a couple months, he's like, hey, we're business partners here, but I'm doing all the work. You have to come on the channel with me. I'm like, I don't want to be on the channel. He's like, you have to be on the channel. We kind of had to fight over it. Long story short, I got on the channel. It wasn't so bad. Started making some videos. Then he's like, okay, you got to get off my channel. Go start your own channel. I'm like, I don't want my own channel. So I sort of was forced into it, if you will. But once I started doing it, I found out that, wow, I actually kind of like this. And so I sort of embraced it. And, kind of what's kept me going is I learned pretty much everything that I've learned. Well, not everything, but really where I got my start learning about like the macroeconomic picture was from a guy named Porter Stansberry, and he writes a newsletter company called Stansberry Research. And Porter Stansberry would write this newsletter every Friday, and he would open it up by saying, this newsletter is probably going to lose me a lot of subscribers, but I'm always going to tell you what I wish I would have heard or I would hear if I was on the other side of the table. And so, I've learned a lot in my career. I've had a lot of wins and a lot of losses. And, I just like to make educational commentary that I think could help other people avoid the same mistakes I've made.
Now, like more of like, let's say, because you have a certain angle when you share certain things, right? Like you look at, let's say, the system as a whole. What are, let's say, your first principles? What are, let's say, the things that you always base yourself on that if you, let's say, have a dashboard or like a mental dashboard, frameworks, cycles. You talk a lot about cycles. What is, let's say, your North Star in that regard?
Well, truth.
Yeah, okay, but truth is subjective, so.
Yeah, I don't think so. I think there's absolute truth. I don't think it's all
What
subjective.
would be absolute truth for you?
Well, gravity's truth, right? So there's lots of truth, right? 1 + 1 is 2. That's just truth. That's just math. So when it comes down to economics and macroeconomics, there's a lot of truth.
Is it?
Yeah,
because I see really like it's a bit, and I'm not sure if you're gonna agree with me, but for me, macroeconomics is kind of playing God, right? You have like lots of indicators,
but it doesn't work,
lots of
right?
factors.
And so that's part of it, right? So with enough money and technology, you can suspend reality temporarily. So I mentioned gravity, right? So gravity is, it's established as a law of gravity, right? However, with enough money and technology, I could suspend gravity temporarily. Now, eventually, I'm going to be beholden to it, but I could temporarily suspend it. And sort of back to your point, yes, with macroeconomics, especially with the fiat money system that we have today, we can suspend the natural laws. So there are laws of the universe. For example, a law of the universe, yes, a truth is you must sow before you reap. You cannot consume something you haven't produced. Now, with enough technology and fiat money, you can suspend that. So what fiat does, what credit does, it allows us to pull value from the future and bring it to the present. So that suspends gravity temporarily, but we're always going to have to come back, and reality will ultimately win.
So eventually, yeah, as you said, gravity will pull you back basically because it's there.
Right. And so when I use that lens, so I try to think about everything from like a first principles level. So basically, we're taking these complex ideas, we're breaking them down to their most basic so we can understand on that level. So then we can formulate our own ideas off of that. So what happens is too many people today, they're like reciting news headlines, and they think they know something, but all they're doing is just reciting what they heard, but they don't really understand it. And so you want to break it down to its most core basics so you can build on top of it. So let me give you an example. So today, everyone's cheering. Well, not everyone. The economists in the United States are cheering Paul Krugman is because inflation came down.
It's over. The war on inflation is over.
Inflation came down, right? So we hear about inflation, and inflation is try to boil down to one number, which is ridiculous, right? Inflation is a very nuanced subject. There's a trillion reasons why a price of a good could go up or down. There's a trillion reasons. But ultimately, first principles level, it all boils down to supply and demand. So that'd be like an example. Now, there's a trillion reasons why supply or demand could be affected. So, for example, government regulations make it harder for me to start a business, which makes it more expensive for me to get supply to the market. So government regulations could create a situation where prices go up, right? But ultimately, at the first principles level, it's just supply and demand. That's an example.
Okay, and so that's, you would say, characterize as, let's say, a misunderstood concept then, because inflation is also like something of a debate of like how you measure it first. That's number one. It's been changed over, I think, correct me if I'm wrong, but over 5 times since the 71 era of the way of measuring actually CPI. That's number one. And number two, there's also like this whole debate of, I've just talked lately to Keith Viner. I'm not sure if you know him, from Monetary Metals, and he had a very refreshing view on credit, saying that inflation is a counterfeit operation actually of the state of credit, and that actually much of inflation is fiscally driven, meaning that through taxes you increase prices and then you have price inflation.
So what I would say, first of all, is I would sort of almost reject the premise of what you framed up inflation to be. And you're not wrong. That's what everyone tells you inflation is. Inflation is when the money supply is increased. So that's an Austrian view. So if I take a balloon and I want to inflate it, I blow up the balloon. What am I doing? I'm adding the volume of air to the balloon. I'm inflating the balloon. So money, when I add the volume of currency units, when I inflate the money supply, that's inflation. When I do that, the prices of goods and services also go up, because when I increase the currency units without increasing the goods and services, the price of the goods and services go up. So what we call CPI, consumer price inflation, is the result of the money supply inflating. So inflation is the money supply. Now, I think it's ridiculous to measure inflation through what's known as CPI, to the point that you're talking about, because first of all, yes, there's a trillion reasons why prices could go up and down, but also it affects all of us differently. Prices of some things go up and prices of some things go down at the same time. So, for example, if I live in my parents' basement and I just eat Cheetos and watch Netflix, inflation hasn't even bothered me. But if I live in California and I'm buying a house and I'm sending my kids to college, inflation's hitting me very, very hard, right? So it affects all of us differently, and so it's like a spectrum. And so anyway, I think it's better to look at it from the money supply side, and then understanding that the result of changing the money supply is the price of goods and services going up and down.
Yeah, now clear. Now, like we've seen, actually, you mentioned Paul Krugman, and he just tweeted like yesterday or so the fact that inflation is over, and he mentioned inflation, but excluding shelter,
core CPI.
Exactly, core CPI, excluding shelter, excluding food, excluding energy, and used cars. But that's pretty much excluding everything else that people actually use. Yeah. So a part of an alien.
So they're counting electronics.
Yeah,
cool. Electronics have gone down.
Yeah, wow. Yeah, amazing. You're gonna buy electronics, and that's actually like the what you exclude is more or less, don't take me on that, 40-50% of actually what constitutes inflation as the different baskets of inflation we're measuring. And so in the end, it's a bit of a distorted view of like what narrative do you want to push, right? Like,
and it's even worse than that. So you already alluded to the fact that the CPI calculation has changed many times. It just changed in January of this year. So they've always measured CPI, well, not always, but recently we measured CPI based off of the previous 2 years. But what happened is last year we had record high inflation, 9.1 in the United States, 9.1%. And so what they did in January of this year, the BLS, Bureau of Labor Statistics, which changed the CPI basket, changed it to a 1-year comparison. So now, instead of measuring from a 2-year average, they're measuring from 1 year. Why is that statistically important? Well, because last year being the highest on record, September of last year was 9.1. If you averaged it out, it would be, I don't know what off the top of my head, 4%, because they measure inflation on a year-over-year basis. But if you're measuring from last year at a high point of 9.1, it's coming way down.
Yeah.
So even that, just last year, they changed that alone. So that kind of shows the manipulation they have there, which is why it's a ridiculous target to hit. And to your point that you brought up, it's core CPI, which excludes everything that you want. The other thing is that prices didn't come down. the rate of them going up has slowed down. That's a big difference, right? So prices have been going up. They're not saying that prices are coming down now. What they're saying is they're going up. They're still going up, just at a slower rate.
Actually, that's even like just one part of the picture. The other part of the picture is, what about the compounded interest of all that inflation that's been accumulated, right? From the base level since before the pandemic.
Yeah.
It's been like year over year, on average, as you said, like around 5%. So go make that 20-year basis, 2%, which is the target of inflation for central banks. Then it's actually half your wealth vanished away.
Yeah.
And there's much of the talk of like, okay, so now we're entering like a more structural era, a more highly inflated structural era, just like we've seen, let's say, in the 70s, or just as we've seen in the 20s and 30s, where there's different drivers for that inflation. And I mean, you could kind of see it now, like with the last 3 months, there's been like a kind of an uptick of from 3% to now 3.6%. And some would say, so for example, Tavi Costa, who I follow, I'm not sure if you know him.
Who?
Tavi Costa. And
I posted one of his charts this morning.
That's exactly what...
I posted one of his charts this morning.
I'm going to put it on as a B-roll. And so this one just shows you like, you are here. Like the start, you are here. And we just basically went through the first wave. And if you really like superpose basically, and if you want to, go for like the correlation, but it doesn't equal causation thing of superposing those graphs, we're in for at least 1 or 2 more waves of inflation. So we cheering up like, oh, the increase is going down. So like trying to quote you, but there's much more coming in.
Yeah.
And my question is, which frameworks do you use? Would you like, let's say, look back at history and, of course, the factors are different, but how would you look at that?
Yeah. So the way I look at it is nothing goes up or down in a straight line. So when prices are going up, they're also going up and down. And when they're going down, they're going up and down. So you have to understand that. So that's sort of where we're at. So we got a high and things have come back down, but it doesn't mean that we're over. Like Paul Krugman celebrating, we did it. No. We got it, it's slowing down a little bit, but it doesn't mean it's not going to go back up again. So then you have to look at what are the structural drivers of that. Now, you mentioned, yes, in the 70s we saw it, and in the 30s, 40s we saw waves of inflation and it coming back. And so, what drives inflation? There's trillions of reasons, but supply and demand. That's what drives inflation. So do we think supply and demand is over? So let's just think about this. So what's really driven the deflation that the Fed, the central banks have been fighting for the last 20 years or so, is globalization and technology, but specifically globalization has led to deflation. So a $100,000 job in the euro or America, $100,000 was shipped to Asia. Now it's $8,000. A $100 part is now being made in Asia for $8. So that caused massive deflation. All of a sudden, prices of goods just started dropping. My phone bill I used to spend $150 on. Now I just talk over the internet. I have no phone bill anymore, right? And so the prices just started cratering. That was globalization. Okay, through globalization, we were able to offshore manufacture things. There's 6 continents where that makes the parts just for an iPhone, and so that's created this massive deflationary event. But that's changing. Now the world is deglobalizing. Yeah. So now the world is breaking apart. And we see this, the BRICS summit was in August. President Xi's over there saying, hey, the BRICS should rise up and challenge the G7 is what he said. Not work with, not cooperate with, no, compete against, right? And so now like the US and China are in trade wars. We blocked level 2 and level 3 microchips from China. Now they've cut us off from gallium and germanium, right? So we're starting to see these games. We're seeing OPEC saying they're going to lower the oil supply. Now there's new wars breaking out in the Middle East. And so all of these things hurt the supply chain. And if we hurt the supply chain, then that causes the price of goods to go up. If now in America, we're starting to re-onshore a lot of manufacturing. And so that's going to push the prices of things back up. So when you look at that, it looks like there's a lot more inflation in the future to me.
Yeah. And that point, would you say like it's purely deglobalization or more localization, meaning a rearranging supply chains?
I mean, call it whatever you will. Yeah. I think both of those are the same thing, right? So if I want to make things more local, I don't want them made across the world. That's deglobalization, whatever you want to call that, but same thing.
And so, because early on you were talking about Firth turning, Neil Howe, exactly.
Yeah. Strauss and Howe.
He wrote a book about it, and you mentioned this quite often, and you've mentioned it also in the previous panels that we had here at the conference. Why do you put so much importance into that framework and that cycle?
I don't put a lot of importance on it necessarily, but I think that history tells us where the future goes because of human nature. So you have to understand, again, if you take things down to their core basic principles, and then you can understand the cause and effect in the past, then you can probably see what the cause and effect looks like again. So for example, if you touch your hand on a stove and it burns you, you know that if you touch the stove again, it will probably burn you again. Mm-hmm. Right? So we know these types of things. If I go up to some big guy and punch him in the face, he's probably going to punch me back, right? So we kind of start to understand cause and effect. We understand how human nature works. And so we can look for these things in the past and see what can we learn from that and bring forward. So that's why I think history is important. As far as like the fourth turning itself, it's sort of like a framework, but it's more of like a political framework, what I call it, right? Because it's based off of generational theory. So it sort of explains what human nature is and how it moves through cycles. I like to think that that's one piece of a bigger puzzle. And really, we need to look at the economic cycles and the technology cycles together to look at all that together to get a better context of what's going on. But I do like these historical models just to, like I said, just give us like some sort of a framework of what potentially comes next.
So now putting that into perspective with also what she said to President Putin in, I think it was April or something, where he said, like, we've never seen changes like these in 100 years.
Yeah.
That's quite telling, right?
Yeah.
I mean, and I'm pretty sure you covered it on your channel over and over, is that we are witnessing a paradigm shift. We is seeing like big forces and blocks shifting, breaking apart, making themselves kind of like say, we want to stay on the table. And since China actually entered the World Trade Organization, all those changes actually drastically changed. Nobody knew back then, in the 2000s, that China would come on being such a strong partner. And then now we've pushed it away against Russia. But there's still dissonance among the BRICS. India and China don't like each other.
I mean, Putin couldn't even go to the BRICS summit.
Exactly.
Because he was going to be arrested.
Yeah.
So, that's never going to work. And that's something I'm actually going to talk about here later, the end of the International Monetary Order. Mm-hmm. So we have this monetary order right now today that's been set up, and really from 1944 under this Bretton Woods Agreement. So after World War II, we entered this era of peace. And it's an anomaly in history where the whole world sort of had this peace, and it allowed this single monetary system to flourish, this dollar homogeny. Yeah, but those days are over, right? And that's ending. And we've seen deglobalization happen before. So we saw globalization was pretty flat through the 1800s because there wasn't a lot of technology for that. And then it took off. And we can see a chart. I don't think I put them in my presentation. I think I skipped it, but you can see
still have time.
We don't have enough time to cover it all. But globalization taking off while global poverty is dropping at the same time. But in World War I, globalization started going backwards. And from World War I through World War II, globalization fell because, of course, we're in a global war. So we're not globally trading in a world war, right? It took then after World War II, globalization started taking off again. And it took 60 years just to reclaim its previous high. And during that time, when again, the other chart showing the globe coming out of poverty, during that time, it stalled out, right? So at the time when globalization was falling, the bringing people out of poverty around the world had stalled out. So globalization brings a lot of people out of poverty. One, it makes things cheaper for us here in the West, so we have more abundance, right? Our cost of living goes down, but it also brings a lot of wealth to these other nations who had no industry or income either. Mm-hmm. So it's really good for the world. So deglobalization is going to be a bad thing for a lot of people. It's going to increase our costs, inflation for us in the West, and in the global South, they're going to lose those jobs. So it's not a good thing for either of them. Although I do want to make the distinction of deglobalization versus globalism. Mm-hmm. So globalism is more political frameworks where you have like the IMF, the BIS, and the World Economic Forum trying to one world government. That's globalism. Globalization is just all of us trading together and working together.
We're obviously at the Bitcoin conference, so we're not going to just miss that point. Obviously, it's a big important point. In a nutshell, how do you see Bitcoin fit in the future monetary system? Because you said the end of a monetary system, but what is the next step?
Yeah, so the monetary system that we have today is pretty much dead, right? It doesn't really work anymore, and it doesn't work anymore. One, it was designed, it was created for a world that we're no longer in, right? So we're just not in that world anymore. Two, it was also created at a time when we had certain technologies and now we have new technologies. So there's a lot of reasons why the deglobalization piece, the rise of the challengers, the BRICS, China, Russia, et cetera. At that BRICS summit, they urged each member nation to use their own currencies, no longer use the dollar. They're starting to reserve their wealth in gold and commodities instead of dollars. So this is a big trend that's happening. It's only going to continue. I'm giving 3 reasons why it's ending. 1, it's ending because of deglobalization. So each nation wants to use their own currency. 2, it's ending because of debt. So every central bank in the world, not just the United States, not just the ECB, but all the central banks of the world have printed so much debt. Like the drag on the growth and on the economy is so heavy that we really can't go past anymore. Without, we can get into that's a whole nother conversation, what happens because of that. But the debt is at an all-time high, and there's really no good way out of it without basically stealing it from everybody else. And then the third one is the most important one, and this is back kind of to a first principles level, is that the fiat money system really works, and really a government works based off of trust. So, even the American military, which is the largest military in the world, is like a couple percent of the people. So like 1 or 2% of the people in America, like it stands no chance if the American people decide they don't give consent to be ruled, right? So it all comes down to trust. We live in a fractional banking world. So if everybody went to go pull their money out of the bank, the whole banking system collapses. So it all works off of trust. Trust is very, very, very fragile. Super important, but it's also very fragile. If you have a business partner that embezzled from you, you'd probably never work with that guy again. A wife, a girlfriend, whatever, same type of deal. And so really, on top of the debt, on top of the deglobalization, we lost trust. And so what do I mean by that? America seized gold in 1933. They basically defaulted and seized gold again in 1971. We saw what happened with the truckers in Canada. Venezuela had their gold stolen. The Afghanistan central bank got their money stolen. And then finally, Russia. There's 3 superpowers in the world with nukes. 3. One of the 3 had their bank account seized. So every nation of the world was just put on notice. If it can happen to Russia with nukes, it can happen to any one of you. And so everyone is now scrambling to get out of the dollar as fast as they can. And again, back to that business partner who embezzles, like that doesn't come back. Mm-hmm. So now they're trying to figure out, what do we do? Well, there's 2 options. 1, do we go backwards? So let's go back to gold. But that's old technology. It failed for a reason, and it's going to fail for the exact same reason.
Why did it fail?
Well, it's old technology. So in today's information age, we have instant transaction times, but gold is very slow for settlement times. So for me to get you gold in whatever part of the world you're in takes forever. It's very expensive. So what happened, in order to speed gold up, in order to add velocity, we had to put it in a bank and then give a ledger system or paper gold certificates. But now I have to trust whoever has the ledger. Back to the trust. And every time we've trusted the person with the gold ledger, they've stolen it.
Apart if you own it yourself.
What?
Apart if you own it yourself.
Yeah. So now we're in the situation where the R in the BRICS can't even go to the S in the BRICS because he's going to get arrested. So there's no trust there, obviously. So how does globalization continue to work in a world with no trust? Now, another option that is being explored is going back to a CBDC system. The BIS and China, Hong Kong, Thailand, and even the UAE has worked on this project called mBridge, which is like a CBDC program where they can swap it out. It's like a hub that the central bank digital currencies can trade. And so that looks like probably a better potential solution because it's more technologically advanced, so it can have instant transaction times. But the problem with that is it's still fiat. Mm-hmm. So we can go back to commodities, but they're too slow and clunky. We can go towards a digital fiat, but that's going to be the exact same problem that we have today. So where do we go? And in a world where trust is lost, it seems like we need a decentralized ledger that nobody can control, that's trustless. It's a neutral ledger that we don't have to worry about someone taking control over. So in my opinion, it's the only thing that we can see as of today that will solve that problem. We have to remember, back to first principles level, that solutions are supposed to come to problems. I say supposed to because, like in the world of blockchain or now AI, everyone's running around with an AI trying to see what problem they can solve with AI. Mm-hmm. But That's not how it works. Like, I have a problem. I need to solve it. How can I solve it? I don't care if it's friggin' Python or JavaScript or blockchain, or it doesn't matter. I want to solve the problem. But today, I have this AI. What can I do with it? What can I do with blockchain? You know what I'm talking about. You've seen that everywhere, right? So I say supposed to. So solutions are supposed to come to problems. We have big problems in the world today right now. We have endless money printing. That's a big problem. So how do we solve it? Fix supply. We have a big problem with censorship. What do we need? Censorship resistance. We have a big problem with permission. Like the money system is permission, sanctions. So we need something that's permissionless. Money is bordered, but now the world's breaking apart. We need something that's borderless. The system that we have today requires trust, but trust is broken. We need something trustless. So those are solutions that come to the problems that we have today. And as where we're sitting as of right now, there's only one solution for that.
Mm-hmm. But do you see, like, last question on like kind of a tandem of the most trusted money so far is gold. It's been around for more than 5,000 years as its current form of money. And we talk about trust. Is it something that you see has like coexistence, or like that has a function of itself, or do you see like
because it nothing happens like with a light switch, right? So when the dollar took over from the pound sterling in the early 1900s, it was like a 30 to 40 year period. So I think probably right now you're seeing people going back to gold. So nations are buying gold right now. They're not buying Bitcoin, they're buying gold. So sure, right now gold is sort of like this interim step. They're still going to continue to pioneer the CBDCs, and Bitcoin will be the inevitable step eventually. So it's sort of going to be like this process. Mm-hmm. That's sort of the way I see it. Gold has been around for 5,000 years, yes. A year ago, it was found out that China's sitting on a bunch of fake gold in their vaults. So how much do you really trust gold? I want to sell you whatever, some natural gas, some oil, some wheat. You're going to give me the gold. I mean, what are we going to do? Like as like drug dealer movie, like give me the gold. No, give me the wheat. Like, you know what I mean? So like, how do I know you're really going to send me the gold? How do I know when you give me the gold, it's actually not like tungsten bars with like gold on the outside? So I don't know if I would say it's been the most trusted money. It's actually been some of the money that's been used to deceive the most, right? That's why they had to put ridges on coins so they'd know if you started to scrape them, right? Mm-hmm. Like it's always been manipulated.
That's the usage, yes. But as a fundamentally, like, I mean, you could also just tamper with anyone by, well, Bitcoin is quite different because obviously that's like the whole premise of it.
But so from a bigger standpoint, it's always technology that changes the world because it changed the way we organize and communicate, right? And so again, in a physical world where you and I lived in the same town, I give you a couple gold shekels, no big deal, right? But now we're in an information world. And so I talked about now we've sped up the transaction time is now instant. Mm-hmm. I can open my phone right here. Well, I'm not in the US, but in the US, I could open up an Amazon. I could click a button and have a package at my house today. Instant transaction. So we need instant settlement, and gold just can't provide that.
Yeah. Okay, great. Awesome concluding notes. Thanks a lot, Mark.
Yeah, good.
Thanks for watching. If you liked this episode, give it a like. And don't forget to subscribe. Leave your actions down below in the comment section. And if you want to watch more videos, feel free to check the most recent video, but also any other video that we've had published on the channel before. See you next time.